Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We should make probably a little bit of a note before we get started. We are taping on Thursday evening, so all of our market prices and market discussions run through Thursday's close. But we did wait long enough to get the results from the Hogs and Pigs report, and we'll get into that a little bit later. Let's first start with what happened this week so far on the markets.
Yeah, I think if we start on the hog side and be positive in terms of what we talk about for the week, cash hog prices were up for the week, up about $1.50 since last Friday on cash hog prices. When you look at the pork cutout value, so we were up nearly $3 on that pork cutout value for the week. We actually got above $1 a pound on the pork cutout for the first time since 2014. So we are seeing a lot of strength in that pork cutout value. And I will say pork bellies continue to be a very strong part of why we're seeing a larger cutout value. Bellies have been up 16 of the last 17 days. They're now sitting at about $1.95 a pound, getting near where they were in terms of their tops back in 2014. I believe among the 9th highest weeks ever that we've seen in pork bellies as we look here at what's happened in the last week of June. On the cattle side, we have a different situation, more of the same as we talked about last week, I guess, in terms of cash-fed cattle. We'll call them down $3 for the week. It's been fairly light so far this week, given that we're cutting this on Thursday. Feeder cattle and feeder calves both steady to $3 lower, so we are seeing that continued lower cattle complex unfold. When we look at the choice beef cutout value, down nearly $13 for the week on choice beef cutout. Across the board, we're seeing weakness in all of the components that make up that choice beef cutout. It continues to remind me of how long it took us to move those prices higher and how quickly now we've moved them much lower here over the past week to 10 days.
And a reminder really of how much that risk management that we've talked about in previous months comes into play for producers as well.
Yeah, absolutely. And so I sometimes like to remind us, I think whenever we saw cash cattle sitting there at $1.45, we knew there was a lot more downside risk and upside potential. Now that we're sitting here at cash cattle that are below $1.20, is there downside risk? Yes, absolutely. We don't want to forget there's downside risk. However, there's less downside risk than when we set at $1.45. So the time to have locked in some prices may have been behind us. But next time we go through where we have an opportunity for some higher prices, using that as a price risk management strategy might be good for folks.
I want to talk a little bit about that belly number as we look at the pork cutout and really strength across a lot of them. But the belly market, you said 16 of 17 days has been higher. What is that, the significance of that, and how vital is that to what's supporting pork prices, or part of what's supporting pork prices?
Yeah, so it is important to remind everyone that it's not just belly prices that have driven the pork cutout or driven hog prices. We are getting strength in a number of those cuts that are important. However, when you think about bellies that are sitting there at $1.95, somewhere near, I think the top back in 2014 for a week would have been somewhere in that $2.15 range. It just tells you that a good third to half maybe of some of the increase we've seen in cash hog prices we can attribute straight to what's been happening in bellies. And for me, we talk a lot about what's been happening on the demand side. Here's a little bit of domestic demand. We like bacon on everything. And it reminds us very strong bacon demand. Look at the other side of the equation. We've been growing pork supplies. We've been growing the amount of bellies that we're producing today. So demand for bacon has been, to me, very strong as we've gone through 2017. And to me, it helps point out that thank goodness we're getting some good demand strength when otherwise we've been pushing some fairly strong supplies at the marketplace.
All right, Hogs and Pigs report came out today, and kind of, it wasn't a snoozer, but there was definitely some interesting things that you had to maybe dig a little bit deeper for in today's report. Let's talk a little bit about the fact that this is the first report in several that we didn't see a ton of revisions.
Yes, I think you'd have to go back 8 or 9 quarters in terms of hogs and pigs reports to see see USDA making revisions in terms of ultimately pig crop that we got, and those revisions were always higher pig crop. And we got very few revisions out of this report for the first time, again, in several quarters. So in many ways, perhaps we are catching up from some of the PEDV stuff that was going on a couple of years ago. We seem to be marching forward when you look at this report with pretty much steady in terms of what folks anticipated out of that report, at least.
Are there parts of the report maybe, or some areas that we were surprised when we took a look at some of those numbers?
So I think if you look a little deeper, you can find a surprise or two, in an otherwise maybe a little more benign report. I like to start just with reminding folks, you look at the number of sows that we had, the pre-report guess was sitting there at 101.4, and we ended up with 101.5. That 0.1% is an amazing accuracy, if you will, in terms of what folks thought would happen and where USDA came out. And you can look at all those categories and almost tell the same story. However, I do think when you look at farrowing intentions, and I talk about farrowing intentions back from the March report that we got, that would have suggested not much increase. Yet when you look at what we got from March through May sows farrowed out of this report, we were higher than many would have expected. And I think that might spell some news for us in terms of when you look at intentions for the second half of 2017. We were showing actual of up 0.2% and up 0.3%. My hunch is we'll come back when we get final sows farrowing for June through August and Sep through Nov that will be higher than what those intentions suggested. We've been seeing that now for a few reports where farrowing intentions versus what we actually get have intentions were running low. So maybe a few more sows farrowed. The other side of that might have been a little surprising, pigs per litter. Many of us would have thought we'd have had a little higher pigs per litter in March through May than what the report suggested. When you looked at it by size, we had a lot of the smaller operations that were contributing to lower pigs per litter this quarter, and I'm not certain what the cause of that was and whether that was why we didn't get the overall growth in pigs per litter we expected, but we'll have to watch that as we move forward as well.
Let's talk a little bit about price projections as we take a look at the Hogs and Pigs report, and what does that mean as we look ahead to prices and what producers need to think about to maybe lock in some profitability.
Yeah, so I'll start with, we have some really good hog prices right now. And just as we talked about cattle, sometimes I'll say, I think there's more downside risk in this market than upside potential. We may not be at the top of hog prices by any stretch, so I don't want to suggest that today is the day to go lock in prices. But as I look ahead, a couple things stick out. I really want to get focused on the last quarter of 2017 and remind us relative to the last quarter of 2016. That last quarter of 2016, we had very strong export demand. And I think that actually helped hog prices stay higher than they otherwise would have in that fourth quarter of 2016. So when I look at fourth quarter of 2017, I say it's hard for me to believe we're going to be higher in that fourth quarter of 2017 relative to where we were in 2016. But I believe I'm in the minority relative to some others that are out there forecasting today. And I think they'll look at the other side of just how strong hog prices have been of late and say, if we continue that trend for the remainder of 2017, we'll be higher. Plus, we do have more processing capacity coming on board, and the demand for those hogs should be stronger. So I think it's that trade-off that it's, for me, a little hard, but all of a sudden you get to the fourth quarter of 2017, can we grow exports as much as we did 15 to 16 in that 16 to 17 window? And I think that might get a little harder.
And we're going to talk a little bit more about exports coming up in a little bit. But first, let's talk Restaurant Performance Index came out. As we take a look at those numbers, let's talk about where they are and what we take from that information.
Yes, we did get May information out on that Restaurant Performance Index. If you look at the April numbers, The overall index set at 100.3. So again, suggesting modest expansion. That came off of what was a March of 101.8. So not as positive as we came off of March. March was a very good month for us. But yet now May comes back at 100.9. So 0.9% growth, all very good news. For me, two pieces of good news. So number one, the current situation was actually up 0.2 in the May report. It was actually down 0.9 in the April report. So being up 0.2 tells me same store sales, the expenditures that we're seeing in terms of expansion, all of that seems to be good in terms of that current situation. Expectations still continue to go higher. They were up 1.7. Demand, whether you measure it via per cap consumption or otherwise, that restaurant performance index to me says we're still getting some growth on the demand front. All very good news out of that May set of numbers on the restaurant performance index.
This week, the USTR, the U.S. Trade Representative, has held hearings talking specifically about NAFTA. You mentioned export demand and continuing to keep up pace as we look at countries like Mexico. And we've seen a lot of pork from the U.S. go there. But then we also look at countries like South Korea, where their domestic demand isn't keeping up with their domestic production isn't keeping up with demand. Those opportunities in those countries to make sure that we're keeping export demand for U.S. pork in check and finding places to put our products.
Yeah, when you realize just how much growth we have in domestic supplies coming, we don't want all those to go on domestic markets. I know that spells some trouble if we don't have an opportunity to move some product outside the United States. I look at Mexico and I go, we've talked about this a lot during 2017, and perhaps we've kind of gotten beyond the original uncertainty that came around with the idea of, are we getting out of NAFTA, are we renegotiating NAFTA? And we've now maybe got a little clearer path in terms of where we're headed forward. And seeing that Mexico still is a growing market for U.S. pork products has been important in 2017. So maybe a little more stability there that I think has been helpful to hog markets of late as well. But you look at South Korea, I go Asia generally. I think it continues to remind us that we have that opportunity where domestic production is probably hard to grow in some of those countries at a rate relative to what we think demand is going to do in those countries. And having U.S. product there is nothing but a win for us. For me, that's kind of the longer term positives that we really need in this market, because I keep saying, when you look at the U.S., yes, we're going to grow a little bit in terms of population, but we're not going to see large increases in the amount of beef or pork that we consume in this country. And we really have to find those new markets outside the United States if we want to keep growing these industries like we have in the past.
Scott, as we mentioned previously, we are taping Thursday evening. While we don't necessarily know what happens or will happen with USDA's acreage report, what are some things maybe you're thinking about as you look at those pre-report estimates and preparing maybe the rest of us for tomorrow's report?
Yeah, so I guess the first thing that really jumps out to me is just when you look at those pre-report numbers, corn, for example, I believe the range of pre-report sets between 89 and 91 million acres. And when you realize that USDA back in March with intentions would have said 89.9, it just reminds me how narrow that range is. And do we get a surprise out of tomorrow's report? Being so narrow, it's like everybody believes USDA is going to pretty much come in where they were with intentions. I think the same thing really sets on the soybean side as well. Fairly narrow range with really going between 88.5 and 90.5 million acres of soybeans in that range. It just seems mighty narrow, and whether we get a surprise out of tomorrow's report will be interesting. If corn acres are down a lot from a livestock perspective, I worry about where corn prices might go for livestock producers, and but we'll wait and see what we get out of the numbers tomorrow. But one of the things that could really move the input side of the equation for livestock producers for the remainder of 17.
It is the 4th of July holiday, so maybe we're expecting or they're hoping for some big fireworks out of that report.
Yeah, absolutely.
One of us had to make a holiday themed joke this week. Holiday is next week as we go into the week. Holidays on Tuesday. Does that impact what happens on the market coming back maybe from a weekend to a day before a holiday, and then a day after a holiday?
We'll certainly see some slower markets, I think, next week as we work our way through the 3rd and 4th of July. So I'm not certain how much movement we get, although, we're going to have acreage report and the crop markets are going to try to perhaps move depending on what we get out of that. But from a livestock perspective, I think it's going to be a fairly slow week in terms of the news that we get out.
And then next Friday, monthly trade data comes out. What are some of the things that we're looking at ahead of that report and maybe thinking about there? And what are we watching for?
I hope we get the same kind of news out of the trade report that we've gotten for a while, and that is that we're getting continued growth in both beef and pork exports in total out of the United States. As I sit here and I go, more pork coming to market, more beef coming to market, we have to continue to talk about growth in those numbers in a number of key countries. We talk about Chinese market opening for U.S. beef. I don't think we're going to get anything yet, but the precursor of all that starting of what kind of growth can we really get in the second half of 2017 in terms of international trade of U.S. beef and pork. For me, that is the key to where prices can go in terms of getting price strength for the remainder of this year.
Scott, anything else?
I think we've covered the major topics for the week, Megan.
Have a great weekend. We will talk to you next Friday. Be careful with your fireworks next week. That's all I'm going to say.
Happy 4th of July.
Have a great weekend. To have our weekly livestock market update delivered to your email box every Saturday, visit our website, brownfieldagnews.com. Click on the subscribe link, and you can also submit questions and comments. And if you'd like market updates twice daily, check out John Perkins' Market Minute. Have a great weekend. Happy 4th of July. I'm Megan Grebner on Brownfield.